What's going on? Welcome back. Ryan here. In this video, we're talking about the price to earnings to growth ratio, the PEG ratio. And let me bring up my little notes here. So price to earnings to growth PEG ratio is equal to the price divided by the EPS divided by the EPS growth. So basically what the PEG ratio can show you is if a company is overvalued or undervalued given its current price per share and the growth of earnings per share over time. Okay, so let's look at this quick example. So company A has a price per share of $35 and the earnings per share this year was $1.97 and the earnings per share last year was $1.64. So to calculate that PEG ratio, we first need the price to earnings ratio, right? Which is $35 divided by the EPS, right? So this gives us approximately, I should write this like this, equals an approximation of 17.8. So the earnings growth rate, right, would be the EPS this year divided by the EPS last year minus 1 gives us approximately 20%. And then to calculate that PEG ratio, we take the PE, right, divided by the earnings, that growth ratio, okay? And we can see that 0.89, right? So the way the PEG ratio works is it's thought that a PEG ratio below 1 could indicate an undervalued stock, right? And a PEG ratio above 1 would indicate an overvalued stock, okay? So same thing here. Company B, price per share is $52. EPS this year was $2.85. EPS last year was $2.25. So we calculate the price to earnings, right? Which the price to earnings is the current share price divided by the EPS, right? So that gives us approximately 18.2, and then again the earnings growth rate, right, which is the difference between these, right? So 285 divided by 225 minus 1 gives us approximately 27% earnings growth rate. And then to calculate that PEG ratio, right, we take that PE ratio, which is price divided by earnings per share, divided by that EPS growth, which would then give us 0.67 approximately, right? These are approximations, and that would indicate that both of these companies are undervalued. Now, again, none of this is 100%, right? All of technical analysis and historical analysis and fundamental analysis, right? There's no guarantees in any of it. And it's important to understand that, but it's also important to understand, right, all of these metrics and data that we can look at when influencing our decisions and what we're doing. Okay, so as always, I'm super thrilled you're here investing in yourself, that you're taking the time to learn these concepts, to learn as much as you can. And in the next video, I'm going to be wrapping it all together. And I look forward to continuing because in the next section, we're going to get into options. And that's when it's going to get exciting. And you're going to learn a lot of experiences that I've learned over 20 years from my mentors and from my failures, which is going to help turn you into an amazing trader if you listen, if you apply yourself. So again, super excited, and I look forward to seeing you in the next video.